Thursday, the 6th of February. Welcome to Business Morning. We welcome our viewers here in Nigeria and around the world. Let's get the show started. We're focusing on earnings that's making headlines across the Nigerian marketplace. Earnings season for the new year 2020 is continuing in the current week. And of course, part of those who are reporting the earnings is a non-interest bearing listed lender, Jaiz Bank, which is the only, that provides non-interest bearing, Islamic finance business. A full year 2019 reporting better than expected numbers on Wednesday across the key line items, and you can see that at the bottom of your TV screen. The gross income came in better, 3.57 billion, or 13.57 billion naira. The net spread after provisions, 9.44 billion naira. Total income crossed into double digit, 10.64 billion, for about 8 billion in the 2018 period. Net profit also crossed to a billion naira for the first time, 1.78 for the period ended December 31st, and earnings per share climbed to 6.06 kobo. That's one of the sweet earnings we have in the current week. Meantime, Notoric Chemical Industries posted a disappointing 1.39 billion loss in the final quarter of last year on the back of 3.43 billion naira finance costs. The company is doing some turnaround via some debts that are financing that's secured from Afrexim Bank. Meantime, earnings by listed oil trading firms are largely in the water. Total, Mobil, or Double One PLC, MRS, Eternal Oil reported negative numbers for full year 2019, but Corn Oil beats the rest of the group with a net profit of 1.98 billion at full year 2019. That's part of Nigeria's earnings season. We'll talk about the insurance sector a little bit later, but let's get Uchenna Minister of Blue FX Nigeria to talk to us about the latest news. This morning, the Chinese says they are cutting about $75 billion from the tariffs around U.S. goods. 1,700 goods are impacted. This is breaking news, and we're following that. Uchenna, thank you very much for coming. We appreciate your coming through to take us through this. This is the coronavirus scare is still there, but this is us. On Monday, we spoke about the trade deals, and we're asking where was that phase one deal, and suddenly the Chinese seem to have found some good news to try to balance out the impact of coronavirus and the scare. This is nice way of doing things, isn't it?
It's more like a smart way to sort of play around.
That's the right word.
Yeah,
smart.
Smart way to play around.
Maybe they were listening to us on Monday.
Yeah, possibly. That investors and business sentiment. Now, with the liquidity injection they did towards the beginning of this week, and also with, as you've just mentioned, what do you call
tariff cut.
The tariff cut. The tariff cut is sort of now giving that that elevation of that risk of sentiment we've been seeing all through last week based on the coronavirus. And
this morning, the stock market, the Chinese market went up massively.
3%. All risky assets right now have been rallying on the back of that, and that has sort of just created. And there was actually a news yesterday saying some research institute have created some effective treatment to the coronavirus also. And that is in itself bringing that bullish sentiment into the market. Investors are more relaxed, saying that coronavirus might just be a temporary thing, and that phase has peaked and has passed, basically, and it's all basically their sentiment as it is. And also that tariff cut is majorly focused on medical supplies from the US. So they need to cut the tariffs. They actually do need to cut the tariffs.
Medical supplies,
yes.
While they're thinking of patenting the coronavirus drug as and when it's ready.
Yes, it's a big deal because right now 50 million people are quarantined. As at the time we spoke, and now, last time we spoke, and now we have another additional 8,000 infected individuals. The total death now is about 500 plus. So it is not really dying or reducing as people would have hoped. However,
you think globally, politically, global politics is trying to manage it and manage the impact on the financial markets. And as we discussed on Monday, you don't have to be infected the impact will affect you.
Yes, it's basically what that is. So they understand that if we can control the rhetorics, we can create that optics in terms of creating calm into the market. That would keep financial markets sort of stable. And we have other risks too with Trump getting acquitted based on his impeachment. That has also created some bullish sentiment also in the market space. So we are getting all of this risk on, should I say, propellants to push high yielding assets to the upside.
So we can all sit back a little bit, stand at ease, as I want to put it, and say, look, yes, we need to deal with the coronavirus and impact, but again, as you see the financial assets, do you think folks are getting back into risky assets like currency at the moment?
Yes.
What have you seen in the last couple of
Yes,
hours?
so yeah, from the beginning of this week, we've been experiencing a lot of risk taking among market participants. We can see the Dow, we can even see the S&P in that regards appreciating significantly. As you mentioned, the Chinese market too have pushed up. The Nikkei 225 has also significantly pushed up over about 400 points between yesterday and today. So we are also seeing those beta currencies also appreciating as a result of this risk elevation in the combination of the Chinese stimulus, the tariff cut, and also some political stability in Washington.
Whatever that happens, and it's good you brought in the U.S. elections countdown to November into the conversation. So, when you look at the acquittal of President Trump for being removed from office by Senate yesterday night, took some time to see how the votes were counted.
Yeah.
And the Senate says, okay, fine, he's got no case to answer. So that on the other side of the Atlantic, coming from the Far East, from where you have the Chinese, and this political issue in the West, would seem to calm whatever is in between down a little bit. The OPEC committee also tried to douse some fire, as it were. So oil prices also climbing, which is a major concern for us in this jurisdiction.
If everything checks out, oil is actually at a cheap price now for people, investors to jump in. It's going to move significantly.
52.
Yeah, to be at par, really, basically. OPEC is looking to extend cuts and even cut deeper, and that's based on the impact they are having from the coronavirus hits from China. And China is also one of those, should I say, commodities that have been elevated in terms of tariff quotas, oil demand from the U.S. So that in itself would provide that bolstering, should I say, bullish sentiment in regards on that commodity space.
Do you think this, we've seen a bit of a sell-off on our own market as well, and when developed markets sneeze, then frontier and emerging markets
will catch the cold.
Takes a good beating.
But if we see that elevation in this space, when investors feel the need to start taking yield, emerging market and frontier markets would benefit. Portfolio, we see that portfolio inflow significantly. Yeah.
So it wasn't anything out of the order what we've seen in the last week or so, even into the current week, if you look at the Nigerian stock market, for example?
Yeah, so I would think investors would always want to front-run risk. Every time something negative comes through, they front-run that by selling off. Once they see that the things are elevated and calmer, they jump in. So we would get those responses. We are thinking the possibility of coronavirus not escalating beyond what is being controlled now. Although it's escalating, but we are saying escalating beyond China now, significantly, probably having significant debt outside China. That in itself might start driving another, should I say, negative sentiment into the market, and that can take significant hit across emerging frontier markets.
A few markets are still dealing with the coronavirus. We look at the UK, for example. The authorities are putting everyone on standby. The health authorities are putting some money in. They've taken Brexit technically out of of one of the high points, but it's still out there. But again, the numbers look like the UK economy is still red hot, as it were, despite the brutal Brexit elections and what have you in Parliament and change of guards at 10 Downing Street to the end of last year. So how does the pound sterling come into play here, one major constituent of the dollar index basket?
I've mentioned the giving British pounds have not really, and the pound sterling has not really traded based on its actual macro fundamentals for a while now. The Brexit risk has created that overhang, that cloud factor, and there is we
So
don't.
it hasn't really pulled its weight
Yes, pull its weight.
as a standalone
Yes,
currency outside the Eurozone.
yes, it has not. So if we expect the Bank of England now to now start acting in that regards, in that space of monetary policies, and if they play the politics well, create the optics from a political standpoint, we expect them to calm the market participants, the sentiments of the people, trying to assure them that we would be making significant trade deals with bilateral trade deals with other countries. That in itself would give the calmness and the
So you're
assurance
seeing a
to.
new horizon here,
Yeah.
which is now for the pound sterling, for the BOE, yes, to assert more independence outside the ECB, and perhaps be a little bit of align itself a little bit more with the Fed
Yes, that's basically what.
than with the ECB, considering that Brexit is over and out. Technically speaking, at least whatever happens between now and December 31st.
Yes, that's basically that's the.
So currency will be a major play for both not just the UK, but for those of you who do FX trading.
Yes. We expect the British pounds to surge on the back of these factors I've earlier mentioned. It's a place where, as I said, has sort of been depressed in value, given those overhang. And once they get this out of the way, they have gotten it out of the way in terms technically. So it's now to start making deals and continue to create that environment and the aura for investors and business to continue to thrive.
Well, what are my best bets now? What currencies are my best bet if I'm trading the dollar portfolio for FX?
So another tricky thing with the dollar is that we still have a significant US to rest of the world growth differential. The yield is still higher in the US compared to other part of the world. So we still expect that carry trade effect into the US, and that would see the US dollar not depreciating in the way the Fed would want it to depreciate. So if you're looking to trade against the US dollar, you have to consider trading currencies that are really weak in that regards. And right now, you should be looking at the Australian dollar, the New Zealand dollar, because of their proximity in terms of trade relationship with China.
And the Chinese yuan, with all the, what's it called?
Risk?
Yeah, what the risks are, what the PBOC is doing, trying to calm the markets, dealing with the virus and dealing with the slowdown in the broader economy, I mean, for Beijing. Do you think the Chinese yuan is a currency in strong conversation here and contention vis-a-vis the Japanese yen? If you look at the earnings and stories coming out of what the Bank of Japan has been doing as well. So if you pair the yen and the yuan together on one hand against the dollar at the other end.
Yeah, so for the yuan, you will always expect the PBOC to defend it. They are going to defend it at every point in time. So you're not expecting significant...
Any day, anytime.
Anytime. They are going to come in as they would come in. They are the lender. They control the lending. They control the borrowing too. So in that regards, in that way, you expect...
They're the one in charge of the market.
Yes, they do that significantly. So was that is the case, I can't really bet significantly against significant depreciation with the yuan. But the safe haven with the Japanese yen, that effect, once we see significant risk, negative sentiment, you expect the yen to always be that place where investors go to push and hide their funds for a bit. So, yes.
Great. Okay, let's leave it there for today. Thank you so much for raising the curtain on this very developing story that came in through. I just woke up this morning and I saw the breaking news, 6 o'clock Nigerian time, and I said, oh, God, okay, this looks good. We can use some good news.
Yeah.
Thank you.
No problem.
Uchenna Minisu is the managing partner at Blue FX Nigeria.